Hello, welcome back to my channel. This is Silvio and my channel is Business Central Musings. Thank you for coming over. Today's topic is the fields in Business Central that can affect your cash flow. And we're going to refer in this video to the fields on the customer card. I'm going to cover two fields that can affect your cash flow statement. So, why cash flow? I am a Business Central developer, and I've been asked a few days ago to expand on those two existing fields that are on customer card to provide data not only to the current fiscal year but to the previous years as well. So we're going to cover in this video one, a little bit about cash flow statement. Two, we're going to look at the customer card in those two fields. And three, a small customization I wrote to expand on the numbers that are reported in Business Central on the customer card, to look at, instead of just the current fiscal year, to look at the previous years as well. And we're going to see in the end an analytics showing the numbers for different years instead of just the base one as it is right now in the base application. Let's get going. Cash flow statement is one of the statements that's prepared by the accountants with every financial cycle, quarterly or annual. And it can be done in two ways. It can be done there is a direct method and an indirect method. If we look, they should arrive both at the same number. But if let's focus for this video on the direct method, just because I'm not an accountant. I'm a developer, and we can see here that the direct method has three chapters or three sections. One is the operating activities, investing activities, and financing activities. Operating activities refers to the core area of activity for the company. So let's say we're buying t-shirts and sell them to customers. We're buying them from suppliers of t-shirts and we sell them to customers through different channels. When we buy the t-shirt, we're increasing the inventory and also we're increasing our payables. When we sell the t-shirt, we're increasing our accounts receivable and our sales account. When we pay the supplier for the t-shirts, we are decreasing the accounts payable and we decrease the cash account because we pay with cash. When we receive money from the customers, we decrease the accounts receivable and increase the cash. So we can see that with all these four activities, buying from supplier, paying the supplier, selling to customer and receiving cash from the customer, we are affecting the cash portion of the business. And that's why the operating activities are here. Investing activities, a company can divest not only selling and buying t-shirts, but they can buy, for example, stocks in different companies like Microsoft, and that would be buying would be a cash out because I'm buying the share. But on the other hand, Microsoft can pay us a dividend, therefore this is cash in. Financing activities, this is to do with the money you pay the bank to maintain that line of credit. You have to pay interest, isn't it? We have to pay interest for the mortgage that we have with the bank to buy the building in which we operate, or the land. So that's a financing activity, and it's cash out. And this is it. We're going to go next into Business Central and look at those two fields. I am here in my training environment. My training environment is based on a Kronos database, and um, it's one of those environments with only 5 customers. But let's bring up the first customer and opening the customer card. If we look down to the statistics, um, we can see under the payments 2 fields, average collection period in days and average late payments in days. So what is average collection period in days? Well, let's say we have 2 invoices, and um, the 2 drivers for calculating this average collection period is the posting date of the invoice and the due date. Obviously, on the payment side, the driver is the posting date. So let's say if we have 2 invoices, one with the posting date of February 1st, due date March 1st. The payment comes on the February 5th, therefore it took 4 days the customer to pay the first invoice. Then we have another invoice on March 1st and due date is April 1st, and the payment is maybe April 2nd. That means it took the customer 31 days to pay the second invoice, plus 5 days for the first invoice. That's a 36 altogether for 2 invoices. Therefore, in average, the customer spends 18 days to pay his invoices. So that's what it is reported in this field, average collection period. What about the average late payments? Well, in the same use case, February 1st posting date, due date March 1st, paid on the 5th or on the 6th. That means it's paid in time, it's not a late payment. We can ignore the first one for the second field here, average late payment. Whereas the other one was March 1st and April 1st, but the customer paid it on April 2nd. Therefore, it's one late day. And in average, because we have one late day for 2 invoices, that means it's a 0.5 days of late payments. I think it's reporting in integers, so that's going to be I have to see the code, probably either 0 or 1. So these are the 2 fields. The issue here is that we are looking at the current fiscal year. We don't really know how the customer was on the previous years, and hence this is the customization, the small customization I built to expand on the calculation done by the Business Central base up engine to get those numbers in, and we're going to have a quick look at what I did next. Okay, so let's have a look at the 2 small customization I built for getting the numbers, the average late days and average pay in days for our customers for all the years, not just the current fiscal year. If we type average here, that's where the pages are, like customer average pay. It's already in analyze mode, and that's not what I want. I want to first get the data, and when I get the data, I get a record for each customer for each year, and we can see some activity in 2023 and 2024. It took in 2023 to a datum 17.92 days to pay his invoices, and a little bit more in 2024. If we move into the analyze mode and as you can see here at the bottom, I pivoted by the average in years. We can see now each year, and we can see the numbers for each year and for each customer. Let's do now the second one, average late pay. Again, we go and grab the data first, and then you can see some late days here, some more late days here, and some more late days here. Let's move into average days, into the analyze mode, and again we see a nicer picture of what happened with these customers and how late they paid. Alright, now let's bring up Visual Studio Code and quickly look at what we have here. First of all, the calculations are based on functionality already written in Business Central. I just tweak it a little bit to get what I needed. For example, for the calculation of the average pay, if we move this one here, let's close that. On the page I have an action that, as you saw, that gathers the data, and I'm going through all the accounting periods, fiscal years that are declared as fiscal years. They have the new fiscal year field turned on, and what we do for each year and for each customer, we do this custom average days to pay. And if we go to look at the function, it is very similar to what the base function is and does. In the two values of those two fields are in the aged accounts receivable. This is a code unit 763, and it's part of the base application. And the other one, it's either in one of them is in customer management code unit, and the other one is in aged accounts receivable code unit. But my customization relies on going through all the accounting periods, and then for each customer it's inserting a temporary record. I create a table for example, customer average. Average pay, it's a table with the customer number, name, average for year, this is the year, and average days to pay. You saw the page is the same, is exposing all these four fields. The other table is customer average late pay, which has a similar schema, and for customer average days to pay, it's basically very similar to what the base application does. I just added one more parameter to look at transactions that happened in that specific year, and yes, I think set filter for year, this is, yeah, set filter for year is also a little bit changed in my code. It will look at it will build a filter for that current year, and yeah, that's the average days to pay. The other one is to get the invoice payments payment days in average. It's very similar. The code is looking at very similar to what is in the base application. I only added again the starting date and the ending date custom, because I want to go through all the years separate processes. And yeah, I won't go through what the code does, but into detail, but it's looking at all the invoices, and for each invoice is finding the payments, and then it's calculating sum of all the payments, posting date minus the due date of the invoice, and it's also summing the invoices, and then it does the average, which is here. So yeah, so that's and it's reporting it as a decimal. So yeah, because we discussed a little bit earlier, I mean, I didn't know if it's going to be reported as a decimal or as an integer, but it looks like it's going to be a decimal. This is it. I'll have the link to my GitHub repository in description or in the comments. Let me know what other fields you're using for managing the cash flow. What things you're looking at Business Central to make sure your cash flow doesn't slip. Thank you, and I'll see you in the next one.